Hey guys, what's going on? Paul here, and today's video is going to be talking about the Bitcoin halving. So first I'm going to take you through what the Bitcoin halving actually is, what it means for Bitcoin, and then at the end I will look at how previous Bitcoin halving has affected Bitcoin, has affected the price, and then maybe look at where potentially it might go. But first up, you have to understand what the Bitcoin halving is. I'm going to keep this fairly high level as well. I won't get down into the specifics, because in reality, the majority of people don't need to understand the inner workings of it, but it is always good to have a high level overview of what's going on and why it's happening and why it was done in the beginning. So at the minute, we are just under 12 days away from the next Bitcoin halving, which the Bitcoin halving happens every 210,000 blocks. So a block is produced in the Bitcoin blockchain roughly every 10 minutes. Roughly, I say roughly because that depends on a few factors related to Bitcoin mining, and I will touch on that later in the video, but we'll stick to the halving right now and how it works. So we'll take 10 minutes as that time. So 210,000 blocks by 10 minutes brings you up to roughly 4 years. So this happens roughly every 4 years. Now I have put together a bit of a blog post here. I do need to get back and start blogging again. I didn't realize it had been so long since I'd put some posts up, so I need to update the blog and get content out there. But basically, it comes to 4 years. So Bitcoin, the first block was on the 3rd of January, and the reward back then was 50 Bitcoin per block. So every 10 minutes, there was 50 Bitcoin given to the miners that helped mine that block. So that meant that there was 7,200 Bitcoin mined every day. So that's new Bitcoin put into circulation. Then on November 2012, when block 210,000 hit, that reward was reduced to 25 Bitcoin per block. So that meant that every 10 minutes, again, roughly, there was 25 new Bitcoin put into circulation. So that's 3,600 a day. July 2016, which was the last halving, that was at block 420,000. That was reduced to 12.5 Bitcoin, which meant 1,800 Bitcoin. And that's where we stand right now. So right now there is 1,800 Bitcoin put into circulation every day. After the halving in May, which is 630 blocks, 630,000, then the reward is going to be 6.25 Bitcoin. So that means that there will be 900 new Bitcoin coming into circulation every day. So in simple economics, the supply of Bitcoin, the new supply coming in, is going down. So if you look at if the demand for Bitcoin stays exactly where it is, doesn't go up, then that would in theory put the price up. But look, nothing is guaranteed, especially when you come to a volatile asset like Bitcoin. So why was this done? This was done to make Bitcoin a deflationary asset, similar to gold. So as time goes on, the supply of Bitcoin is going down, and you would hope that the demand for Bitcoin is going up. So in simple terms, this should push the price of Bitcoin up as it gets more scarce. So again, there's a chart there that shows it over time, and you can see how the curve is really starting to flatten out now in 2020 as we approach this halving. Compare this to the dollar. So this chart here shows the spending power of the dollar over the this goes back to 1913. So you can see the rise and fall of the dollar here, of what a dollar was actually worth over time. And this doesn't take into account the pandemic that's going on at the minute and how the trillions and trillions of dollars that have been printed over the last few weeks. So again, this is really going to drive down the spending power of a single dollar, because if you effectively, let's say they double the dollar amount by the end of this, then what does that mean for the dollar? So a dollar last year, is it still worth $1 today when there's actually double the money supply, or is that $1 now only worth a spending power of 50 cents? If it was as simple as printing more currency all the time, then the governments wouldn't need to tax people. But there are always implications, which we will see down the line, and I might do a video on that fairly soon. So how does the Bitcoin halving affect the price? So the price is basically we have to look back. Like anything in Bitcoin, we have to zoom out and look at this on the grander scale, because when we look at it day to day, the asset is so volatile, then you can't really take much day to day apart from if you're scalp trading. So if we look at this on an overall grand scheme, yes, there are lots of falls, but there are lots of rises too. And in general, the price of Bitcoin has been on an upward scale. So this chart here shows the different halvings and the cycles within that halving. So generally, there is a strong bull run after the halving. Might not be straight away, it might be a while after. There may even be a dip after the halving at first, and then a bit of a rise after that. Then you see a bear market, then people start to accumulate again. Then there's the expansion of this where we may go up a small bit, and then again you start creeping up and up as we get up to another halving when the FOMO kicks in. People are afraid that, oh, it's going to take off without them. We've kind of seen that yesterday and today, where the price of Bitcoin has shot up to over $9,000, with people thinking, is the bull run starting already? And they're trying to jump in. We will definitely see pullbacks. How far back they go, we don't know. But to me, long term, I am still bullish. I still think we're going to see new all-time highs in Bitcoin. To me, it's nearly a certainty now, especially with what they're doing with the dollar. They are devaluing the dollar. So to me, that on its own would nearly push the price of Bitcoin up to new all-time highs. So again, in the article, I have a small bit here on how Bitcoin are created. So this talks about mining. I will touch on it just for a minute. If you only came to hear about the halving, thanks for watching. Give the video a like, a share, and leave a comment down below. Let me know what you think. So on Bitcoin mining and how they are created, basically every 10 minutes there is a new block created. And it's roughly every 10 minutes because what happens is the speed at which the block is found and produced depends on how many miners are in the actual mining in the network at that time. So every miner produces or gives the network a certain amount of hash rate. And a miner is basically a computer. It's a computer processing, solving the algorithms and giving power to the network. So depending on how much hash rate, which is the processing power, is in the network, that's how quick the blocks are found. So if there is a huge spike in hash rate, then every 2 weeks, no matter what, whether it goes up or down, the difficulty of finding the next block is adjusted. So depending on the hash rate in the market, that is when the difficulty level either goes up or down. So if blocks are being found in 9 minutes, the hash rate is so high, they need to up the difficulty. So make it harder for all of them people to find the new block and to average it out at 10 minutes. On the other side, if the blocks are being found every 11, 12 minutes, then what they need to do is reduce the difficulty so it's easier for the people in the network to find the next block. So that's the summary of where the 10 minutes come from. I hope that has been useful. Don't forget to give the video a like, a share, subscribe if you're new, and I will talk to you guys soon. Thanks very much for watching.